Hello, I'm David Mandy, President of O&M Partners. I want to welcome everyone today to the Lumina Gold Town Hall Call webinar. Lumina Gold trades on the TSX Venture under the symbol LUM, and they also have an OTC listing here in the States, LMGDF. For those of you who are new to these broadcasts, O&M prides themselves as being the link between the investing public and public companies. I think in past times, these groups oftentimes passed each other like ships in the night, but our digital roadmap, which we've been building over the last 6 years, enables us to keep pace with the tremendous changes in investor demographics and how they receive information. We want this broadcast to answer all of your questions. Questions will be easily answered by going to the question portal of GoToWebinar or by emailing us. For any questions that remain unanswered, we'll follow up in a timely manner after the call. For those who have dialed in with their phone, the only way you can hear the pre-recorded introductory presentation is on your computer speakers. That's not possible. You'll be able to hear the main presentation in 10 minutes. So please stay tuned. Before we turn to our host, we have a special guest today, Larry Lepard of Equity Management Associates, speaking on what to watch for now. Mr. Lepard runs an investment partnership, which is focused on investing in gold, silver, and the gold and silver, both the physical and also the miners and the equities since 2008. Prior to EMA, Mr. Lepard spent 25 years as a professional investor and a venture capitalist. He holds an MBA from Harvard Business School, provides free quarterly newsletter with detailed insights into anyone that asks. It's a real pleasure to have Larry with us today, and I'm going to turn the call over.
Yeah, first of all, I'd like to thank you, O&M, for allowing me to hold forth here on an area that I know a lot about. I think you watch what the stock market is doing, you watch what the dollar is doing, and you watch the price of gold. I actually think the best indicator of how fast the system is coming unglued is the gold price. I mean, you know, everyone says, well, is the dollar strong? Is the dollar weak? Well, it depends against other currencies, and they're all fiat currencies. So I don't really view that as the most important measure. I think that, you know, when the gold price takes out 1900, which was the old high from 2011, and then starts pushing into the twos and then passes 2500, you know, more and more people are going to say, hang on a second, there's something going on here. You know, maybe this money isn't holding its value. Maybe I need to have some of that gold. And then it passes 3000 or 4000, and you know, you kind of get what I call, or what is described as Gresham's law, which is good money shoves out bad. And so people realize their savings are losing value and that they ought to be saving in gold, and it's going to shove the demand for gold up. The other thing to watch is the bond market and the Fed balance sheet. I mean, this only works, you know, there is more inflation than they say there is, and this only works if they're able to keep interest rates low because of all the debt. I mean, all the debt is so large that if it were to ever be marked to some kind of real market interest rate, you know, the entire world would be bankrupt. And so as a result of that, they have to keep interest rates low. And right now, the bondholders are kind of anesthetized because they know the Fed has their back, and they know the Fed will buy whatever bonds they want, and they don't see a good alternative. I mean, there is no alternative other than maybe the stock market. Maybe that's why the stock market's held together. You know, the Zimbabwe stock market did well in you know, nominal terms, not real terms. So you know, I think what will happen is eventually what you'll see is the bondholders will say, hey, hang on a second, you know, I got to get out of this thing. This is yeah, they'll pay me back nominally, but that's not going to have any value. The inflation that's coming, the debasement is real. I got to get out of here. And they'll say sold, you know, and it'll be a government bond, and they'll sell it, and there'll be no buyer, you know, or certainly there'll be no buyer at, you know, 70 bips on a 10-year treasury. And so, you know, it'll be sold to you, Fed. And then the Fed will have to put it on its balance sheet, and then that balance sheet will start going up. And I've described this in my quarterly letter, which I'd be happy to send anyone who wants to see it. But you know, basically it becomes a doom loop. So you know, the bondholders say, oh, there's inflation, I'm going to sell my bond to the Fed. The Fed says, all right, I got to keep interest rates down, so I got to buy that bond, or else interest rates will go up. I mean, bond prices down, interest rates up, or bond prices up, interest rates down. And so the Fed steps in to buy it. The Fed balance sheet grows. That growth represents monetary debasement. And then people say, oh, it's getting worse. I got to sell more bonds. And then pretty soon, the end point can be some sort of very serious inflation, or perhaps even hyperinflation. I mean, that's in the Weimar case, that's what happened. It was a very similar setup back in Germany in 21. And it took 2 years to unfold. I mean, by November of 23, the old Reichsmark was worthless. It was wheelbarrow money. So, which is why, by the way, the Germans until more recently were the firmest in terms of trying to be monetarily sound, because they had grandparents who'd lived through it. So, I'd say watch the bond market, watch the price of gold, watch what the government's doing. I mean, they've signaled they're going to do yield curve control, which is effectively they more or less come out and said, we've got to buy the bond market to keep interest rates down. The other thing they've kind of hinted at, and I wouldn't be surprised if they ultimately do it, is they've hinted that Congress maybe should give the Fed authority to buy the stock market and keep the stock market from declining, because so many people have the retirement savings in the stock market. If the stock market declines, it's going to make everything much worse. And so, Janet Yellen came out, she spoke about that on CNBC. And, to me, that was a big tell that they're definitely considering it. I mean, the Swiss central bank has done it. And it wouldn't surprise me at all if they decided to do it here, which is why it makes it very hard to short the US stock market. I mean, and honestly, the biggest disconnect I see in the world right now is the stock market is within spitting distance of its old level. And yet, we're looking at a 40% down GDP this quarter. So, I mean, go figure, right? I mean, and it was overvalued at its old level. So, but I'm sure the people who are buying those stocks are thinking, well, what am I going to do? Buy a negative yielding bond? No. Put it into cash? No, that's getting debased. I mean, what really needs to happen is they need to wake up to the fact that the money is being severely debased, and that the way to protect oneself from that is to own physical silver, physical gold, and then you want to be more aggressive about that. And I mean, gold is the asset that Buffett says it's a goose that doesn't lay eggs, because it just sits there and there's no productive use of gold other than storing value. And so if you want to be in a more productive investment, you would buy a gold miner or a silver miner, because they take capital and they use it to produce gold out of the ground. And it just so happens that those companies are extraordinarily undervalued based on all historical metrics, such that they could double in price and still only be at the low end of the range of fair value. So, it's not beyond the realm of possibility, in my opinion, that we're going to have a 3 to 4 to 5x growth in gold stocks in the next 3 or 4 years, and potentially more. I mean, some of it will depend on what the gold price does. I mean, I can see a doubling in gold stocks with gold staying at $1,700, but I don't think gold's going to stay at $1,700. I think it's going to go through 19 sometime this year. And, then it's really going to be game on, because it'll be, all-time highs. That lights up a lot of the computers. I mean, a lot of share trading today is based on computer algorithms. And, they tend to chase stocks. I mean, the indexes especially tend to chase stocks that are hitting all-time highs. And then, of course, it becomes self-fulfilling. They hit another all-time high, they buy more. And so, gold will hit an all-time high at $1,920 or so, at $1,920 an ounce. And what are we, we've been as high as $1,765. So we're really close. I mean, it's not that much percentage-wise. And I think we'll get there pretty soon. And then it really gets fun. So it's an interesting time to be in this business. It's rather sad in terms of what's going on in the society. And it's sad in terms of how much people are going to suffer. I'm not rooting for any of that. I'm very much opposed to that. But the issue, I mean, and just as it was sad the way people suffered in the Great Depression, the problem is, Bernanke, the takeaway from the Great Depression for Bernanke was, well, we didn't do the right things, and therefore everyone suffered in the Great Depression. Well, no, that's an inaccurate view of it, in my opinion. What happened is they shouldn't have ever let the bubble build to begin with, because when you get a bubble, you're going to get a pop, and when it pops, somebody's going to get hurt. Period. End of story. So, the right thing to do is to have sound money and to not have a Federal Reserve, so that you're building on a sound basis, and then you don't have these bubbles and bursts, and you don't have all the pain that's associated with the burst. But that doesn't really serve the politicians' needs to, seem powerful and get reelected and tell us what to do and so on and so forth. So, we've been condemned to a system that is the way it is, and given that that is the system, all I can do is try to protect myself and my family, my investors, from monetary debasement. And I'm pretty sure gold and silver mining stocks are the right way to go in this environment. My personal opinion is that everyone who has savings and is trying to protect themselves in this climate should start by owning physical gold, bullion, coins, bullion, whatever, in a format that they know is secure and that they can get at. Obviously, owning them in your own personal possession is great. There are things like, the bullionvault.com. I've got some there. There are ETFs that are safe, like in my opinion, like PHYS, PHYS. I do not trust the ETF GLD, long story. But you start by owning physical. Then to the degree you want to try and have growth capital or speculative capital, then you can move over to the miners. And you start there probably with the royalty companies because they're the safest. They're expensive. They probably don't have quite as much upside, but they give you some more upside potential, I think, than the physical, because they're levered to the physical. Below that, you go into the majors because they have a lot of mines. Again, they're more expensive. They're not going to go up as much as the juniors, but they are going to go up with the price of gold. And then below that, the more aggressive place where you can maybe multiply your money is in the juniors, but be careful because they're very, very volatile, and you need to understand what you're doing. A good way to start is with the majors, with the index, GDXJ, and then start picking names. You can give your money to a fund manager who knows how to pick names. But even if you're going to pick names on your own, take whatever you're going to invest and divide it by 10, and pick 10 names, because I guarantee you, they're going to be names that totally blow up. But you look at it mathematically, and if you have one that goes down 1 and it goes up, and you have some others that go up 5x, it's going to work. But unfortunately, if you just pick the one and it goes down, you're going to really regret it. So make sure you spread your bets out across, at least 5 names and preferably 10. So that would be my advice to people who are looking at this area. Yeah, thank you very much, guys, for having me on the program. I always enjoy talking to resource investors. I do have an email list that I put people on. I write a quarterly summary of what's going on. It's free, so I'm happy to do that. Anyone who sends me an email, I'll add them to the list. My email is my name. It's LL, so 2 L's, and then my name, Lepard, L-E-P-A-R-D. So L Lepard at EMA, Edward Mark Alpha, the letters, the number 2.com. So EMA2.com. Send me an email, add you to my list, and you can see my commentary, which I put out every quarter. So.
Thank you very much, Larry Lepard of Equity Management Associates. And now we're going to turn to our host of today's call, Marshall Koval and Scott Hicks. Now, before I introduce Marshall and Scott, I would like to make out a point with the riskiness that Larry brought up in the junior space. One of the great ways to mitigate any risk is to pick it's hard to pick the properties, but you can pick, as they say, the jockey, the company head, and you'll see the ones that are successful have done it over and over again, and that's the key, I think, to finding the right jockey in the gold mining space. And that leads us to Marshall Koval, Marshall's the president, the CEO of Lumina Gold Corp. Marshall has, first of all, just a deep background in the mining industry, from M&A and finance to exploration, development, operations. He's been in over 30 countries. But the key to this story is that he's been a member of the Lumina Group for over 15 years, over which time he sold 7 companies successfully during his tenure. So this is a person who's, as I said, done it over and over again, and really knows what he's doing. And also very pleased to have Scott Hicks, who's VP Corporate Development and Communications at Lumina Gold. Scott previously was an investment banker working for RBC Capital Markets, also BMO Capital Markets for 10 years. He's been with the Lumina Group since 2017, and I think Scott and Marshall are a great team. So on that note, I'm going to pass the call over to Marshall.
Thanks a lot, David. Hopefully you all can see the screen here. I really appreciate the opportunity to talk to you today. I think Larry's intro was spot on. I think the takeaway from that I'm going to start with is the undervalued nature of the junior equities in particular, and specifically I'm going to talk about Lumina Gold and why it's such a positive investment thesis. You know, we're advancing the largest primary gold deposit in Ecuador. Here's a forward-looking statement. But I'm going to show you in a second here one slide that I think makes the argument that we're a superior investment proposition within the junior gold space. As David mentioned, the Lumina Group has a solid track record of history. I joined Ross Beaty in 2004. He founded the group in 2002, and it was primarily in the copper space. The business plan was to acquire large assets, add value, de-risk them, and move them on to somebody that would build them. And we successfully have done that as a group for over 15 years now. If you look at these tombstones here, these are several of the deals that we did. We raised about $275 million in the market and returned about $1 billion to shareholders over a period primarily of about 10 years. Let's talk about Cangrejos in Ecuador. It's the largest primary gold deposit in Ecuador. There's about 17.1 million ounces of gold in the resource there, about 2.2 billion pounds of copper. We just put out this week an updated PEA. We were headed down the path of doing a pre-feasibility study on the Cangrejos deposit, and then we made a significant discovery at Gran Bestia, a satellite deposit. So we elected to update our 2018 PEA to do a new PEA. And we just completed this. And, you know, basically what it tells you is that Cangrejos is one of the top global development projects for gold in the world. It's got a significant copper byproduct. We're looking at production of over 366,000 ounces of gold per year. We're looking at an extended mine life of 25 years versus 16 in the 2018 PEA. So, you know, the project has the strength to move through several cycles in the gold market. And if you listen to Larry's comments earlier, you know, we could be going straight up from here. So, you know, this is a good asset at a good time. We're looking at low cost of production, $604 per ounce cash cost net of AISC, and that's from a copper byproduct company or byproduct credit. Robust economics, 16.6 billion at a 5% NPV using $1,400 gold. So it's got quite a bit of leverage to the gold price, a lot of torque to it. So if you use 1680, and by the way, I believe gold closed at 1740 roughly today, but at 1680, it's 2.5 billion after tax NPV. So this thing has a lot of potential, a long life. It's got excellent infrastructure surrounding the project. You know, and we've spent about 6 years drilling, de-risking, engineering the project through this study that we just released. So I'll walk you through some of the study here in a second. So this is the slide I was alluding to earlier, and it's kind of the reason to buy Lumina Gold, and it's the value disconnect. So if you go over to the left on this slide, you can see in 2017, when we released a resource of 4 million ounces of gold, and you fast forward to today, on the bottom there, you can see the share price is up roughly 19% since 2017. But the gold price is up 41% since 2017. And then more importantly, which I don't think is fully recognized and we're not given value in the market, is that the Cangrejos resource has grown over 400% in that same time period. So, you know, that's why we think there's a fantastic investment opportunity here. And, you know, there's additional upside beyond this as the gold price moves towards 1900, like Larry and others have forecast. So let's look at the corporate structure. There's 331 million shares issued and outstanding, 343 fully diluted. We don't issue warrants. These are the fully diluted basis includes some options to management and the board. Our market cap is 255 million. We had 4.1 million US cash on hand at the end of March. Most of our activities right now, we're not drilling at the moment. We primarily have finished up this engineering. So after this month, our burn rate goes down quite a bit. We've been trading in a range between 47 and 81 cents. We have research coverage by Haywood and Fundamental Research, Haywood at $1.50. And when you look at the key shareholder base, management and the board and Ross Beaty control about 27% of the company. Ross has 19.9, management and board 9.6. Ecuadorian Entrepreneurial Group about 9%, and Route One, a fund out of California, has 6.4%. So Ecuador has really progressed since we started working there in 2014, 2013 timeframe. They had a real punitive fiscal regime and regulatory regime, and that's been turned around now to where it's highly competitive, and you've got a lot of major mining companies in the world, both gold players and copper players in the country. Some of the biggest structural reforms was getting rid of a windfall profit tax and lowering the NSR royalty rate, and then also a VAT refund once you go into production on capital costs. So, you know, as we sit today, the end of 2019 was a big milestone in the country. Both the Mirador mine, it's a 60,000 ton per day copper project, and Fruta del Norte went into production. That's Lundin Gold. And, you know, there's been over $2 billion invested in these two projects. And it sort of proves that you can permit, you can finance in international markets, you can build and put into production large projects of $1 billion sort of initial capital range. We talked about the players that are in the country, BHP and Anglo American. We have a sister company, Luminex Resources. We have joint ventures with those groups. A lot of guys, Newcrest, Fortescue, Southern Copper, Codelco, Hancock have been in there a while. But a couple new recent developments in the gold space beyond Newcrest, who's been a big player, is Franco-Nevada came in on a royalty deal with Sol Gold last month. And then Wheaton Precious Metals is in country as well, along with Dundee and IM Gold. So, you know, geologically, the most highly prospective area within Latin America, and the fiscal regime and the country risk has fallen in line where we're seeing everybody who are major players in the sector coming into Ecuador. So we talk about Cangrejos. There's a lot of work has been done. There's over 100,000 meters of drilling all in on the project. This Gran Bestia discovery that I mentioned earlier is a satellite deposit that we elected, instead of going down the path of a pre-feasibility study after the 2018 PEA, we updated that PEA to include Gran Bestia. It hadn't quite been drilled to the same level of Cangrejos, but the project benefits from a lot of aspects. It's about 40 kilometers from Puerto Bolivar, where Mirador is shipping concentrates from. We have an airport at Santa Rosa. From the Santa Rosa airport, it's about an hour to get to the site. There's ample power. We're connected to the power grid. Obviously, to build a mine, that would be upgraded. We have paved highways within 8 kilometers of the site. There's ample water to build the project, both at 40,000 ton per day, the initial size, and then the expansion in year 6 to 80,000 ton per day. Low elevation, the highest elevation is 1,300 meters. It's not a high Andes situation like you see in a lot of Peru and in Chile. And very good community relations, a lot of good working relationship with the community on social programs, employment, that sort of thing. So the most common questions we get asked on Cangrejos is, you know, does the project have scale? And the answer is yes. It's the 37th largest primary gold asset in the world. This is all assets producing, development, and otherwise. And it's the 14th largest undeveloped primary gold deposit by gold production capacity. And this is projects that can produce over 250,000 ounces a year. What about the grade? We get questions about the grade. It's measured and indicated 0.73 grams per ton gold equivalent. Or if you look at it from a copper perspective, it's 0.5% copper. And the question comes up is, you know, can you build these things with these type of grades? And if you look at it in large major capital projects that have been built lately, Cobre de Panama was built, similar kind of grades. If you look at copper equivalent, Mount Milligan, Red Chris, so you certainly could do it. And what about the Capex? So, you know, in the 2018 43-101 PEA, the Capex was 831 million. And this, in the updated PEA, it's $1 billion, but there's about 112 million of that is VAT, that is refundable. So once you start production, that VAT is returned to you over a 5-year period. So in reality, you know, the initial capital on the project's in the upper 800 range. And if you look about recently constructed projects in Ecuador, as I mentioned earlier, Fruta at 700 million and Mirador at just over $1 billion were completed in 2019. So a lot, as I mentioned earlier, also a lot of Cangrejos at PFS on the engineering work. The majority of the Cangrejos resources that indicated. The Gran Bestia satellite deposit is not quite as far advanced. Only part of that is that indicated, and that's part of why we updated the PEA for both deposits combined. So one of the things we see with Cangrejos and Gran Bestia, this is the inferred and indicated resources, but if you look at the base case of indicated resource, for instance, at 0.3 gold equivalent cutoff grade, you can see that there's about 10.4 million ounces there. And one of the things about this deposit, it's fairly homogeneous. So if you increase the cutoff grade to say 0.5, you still have 9 million ounces of gold. So it's not real sensitive to cutoff grade, and that helps the project quite a bit over a long mine life. In the upper left here, I have Gran Bestia. That's the new satellite deposit. To the right is the Cangrejos. There's both have exploration potential, and Gran Bestia is open to the north and to the northwest. And then Cangrejos remains open at depth and to the southwest. And, you know, after completing this PEA, we're looking at potential planning and what it would make sense in the future to optimize the project and what type of drilling could be done if we elected to do so. This cross section, the bottom blue line is the resource in cross section that the current 43-101 PEA was done on. The resource was done in November of 2019. And then on Cangrejos, you can see a gray line there. That was the original PEA resource that was done in 2017. You know, we talk about upside exploration potential. This is some geophysics over the site. So you can see where it says Cangrejos and there's all the black dots, and then Gran Bestia, those are drill holes. What this geophysics shows you is there's additional targets that remain to be tested away from the known mineralized area. This is blue sky. Now, whether you can pull together more resources or not, you really won't know till that's drilled. At this stage, we understand the scope of Gran Bestia and Cangrejos together, and we're pretty comfortable moving forward with the PEA that we have today. So let's look at the PEA summary. Over years 1 through 5, we're talking about 267,000 ounces of gold production a year. And then years 6 through 25, 391,000 with a life of mine average of 366. And on the right, you can see the copper, which peaks at about 50 million tons, 50 million pounds in the years 6 through 25. You can see the process grades, life of mine there. And then I'll flip over to the cash costs. So what we're looking at is C1 cash costs of $545 net cash cost. And if you look at that on a gold equivalent basis, it's 725 per ounce. And then if you look at all-in sustaining capital, it's 604. And then if you look at it on a gold equivalent basis, 772. As I mentioned earlier, $1 billion roughly initial capital. Year 6 expansion from 40,000 ton per day to 80 is another 454 million, plus sustaining capital net of closure costs, 404 $445 million over the life of mine. So now if you look at post-tax IRR on this at $1,400 gold, it's 16.2%. And if you were to look at that at a higher gold environment, say 1620, which is and 320 copper, you're looking at 21% IRR post-tax. And those equivalent NPVs at 1400 are 1.5 billion at 1400 for the NPV at a 5% discount rate, and then 2.5 billion at 1620 at the same discount rate. Metallurgy, without getting into all the numbers on this chart, the metallurgy is good. We're sort of looking at total recoveries of gold for the 3 different ore types. The primary ore type is fresh rock. That's about 94% of the material that would be processed, is 82% gold recovery, 84% copper, 69 silver, and 50 molybdenum. About 12% of that will be produced in a doré. We included a CIL circuit. In the 2018 PEA, we eliminated the saprolite and saprock material and we wasted it. Metallurgical work showed that we could recover 75% of this material if we added a CIL circuit and recover some silver, so we've done that. So we've taken an issue which would have been waste and we turned it into a revenue. So really the project's going to produce 3 products, the doré, a copper gold concentrate, and a molybdenum concentrate. So if we look at, there's only 32 active gold development projects that can produce over 250,000 ounces of gold a year. Cangrejos is the 5th largest globally, and it's 5th largest globally controlled by a independent developer. So the independent developers are the gold bars there, and then the blue bars are mid-tier and major developers or producers that control these other projects. So it's one of the few projects that can be transacted on. And if you'll recall, we talked about the business plan of the Lumina Group. It's to add value, de-risk, and move these projects on because they're quite large onto a capable company that would build them. If we look at valuation from another metric, not just the gold production increases and the lack of response in the share price, we see that there's a bit of an Ecuador discount. If you look at price to PNAV ratios, Lundin Gold is above 1 times, and they've been able to get through production. So Lundin has kind of emerged from that Ecuador discount. But if you look at the other Ecuador developers on this list here, they're trading at an average PNAV ratio of 0.29. And then if you look at Western world developers, similar kind of projects in other areas, they're trading at about 0.5. So, you know, does Ecuador merit a discount? Probably somewhat, because it's an unknown jurisdiction without a long history of production. But does it merit the type of discount that we're seeing? My answer is no. So if we look at Lumina trades well below its development peers, if you look at the gold ounces in price on the left-hand side here and the attributable ounces, we're trading about $7 per ounce in the ground. And if you look at our average peer, you can see this red line, they're trading about 52 per ounce of gold equivalent in the ground. So we believe there's a big value disconnect there as well. So, you know, the big deal with the communities that I mentioned earlier, we've got real active corporate social responsibilities. And listen, the government of Ecuador is really supporting responsible mining. It's becoming more critical to its economic future. You know, it's been reliant on oil revenues and oil production, somewhat on agriculture and tourism, and oil's really taken a hit. A lot of the government budgets were $100 oil, and we're in a lot lower oil price environment. So responsible mining has become more and more important, and the government has come out supporting that as well. And they continue to improve the fiscal and regulatory regime. So it becomes critical for your social license to work closely with the communities. And, you know, we've done a lot of work with the communities. We're doing sustainability work where we're helping them build community enterprises to get revenues with things like vegetable production. We help them build greenhouse. We're helping them with seeds and sampling to restore land in and around Cangrejos. Done a lot of habitat restoration, that sort of thing. We support education, health, and a lot of programs like that. And we can provide a lot more details. There's a lot more going on than I can show in the slide here, but it's a cornerstone of how we do business, and it'll continue to be more important going forward. So in summary here, why Lumina Gold and what's really changed? Since the 2018 PEA, we've showed a large-scale profitable project at $1,300 gold. Subsequent to that, we've drilled 40,000 meters. We doubled the size of the resource, improved the metallurgy and the engineering. We've just released the updated economic study that is fantastic. So listen, I guess at the end of the day, the new 2020 PEA shows 1.6 billion NPV at a 5% discount. That's using $1,400 gold, and we just have a US 190 million market cap. So we think an investment thesis, there's a lot of upside to this story. We think it'll be attractive to majors because of the mine life, the economics that we've been able to demonstrate in the PEA, and basically we're going to continue to move the project forward with the intent to move it on to somebody that would build it. And finally, gold's risen $300, $400 an ounce, while Cangrejos has grown substantially, but our market capitalization has remained flat, and that's probably the biggest frustration to management. This stock should be quite a bit higher, well north of $1. And so at this point, I'll go ahead and turn it back to David, and we can get into some questions. Thank you.
Thank you, Marshall. As always, very well presented. We're going to start with Chesley Morton. Chesley, good to have you on the call. Chesley? Scott?
Can you hear me now? Sorry, I think I was off.
Yep, we can hear you now, Chesley.
Okay, well, sorry for that. First of all, thanks for that slide with regard to government economic reforms over last decade or so, including the most recent ones having to do with windfall profits and so forth. Do you know to what extent that mining revenue is now making up for those shortfalls in oil prices? To what extent is the government getting a pretty good amount of revenue from this now?
Yeah, so basically what the government was sort of looking at after Fruta and Mirador were commissioned and in full production, they were sort of looking at 4% of the GDP coming from producers and exploration in the country. And obviously that's been slowed down a bit by the COVID crisis. But what I think will happen going forward is they're looking at reopening the concession system possibly later this year and getting more concessions open. And I think over time, you'll start to see that number move beyond the 4% and start heading towards sort of 6 to 8% of GDP of the country as some of these other projects get built.
Yeah, that's the hope. And then it's, I guess, been everyone's experience when NGOs come in to agitate. Usually their mantra is that mining companies are poisoning the land, and they try to excite the indigenous people against that based on what they see as a ruination. To what extent are you counterpunching on that? I know you're doing a lot of community outreach, but is education a part of that?
Yeah, education's kind of a key aspect of it. We brought computers into these schools in these rural areas. I think let me step back a little bit. And obviously there's the indigenous situation with indigenous inhabitants. And in this area, we don't have indigenous communities, but what we do have is communities that are sort of developing communities that some live below the poverty line and some at the poverty line. But it becomes critical to kind of partner with these communities to help them in the long term. And we've gotten really good support. You know, at the end of the day, if you really boil it down to what these local communities are looking for, is they're looking for work. They're looking for the ability to improve their health standards, their education, opportunities for their children. It's really not that much different than what you and I would want for our children as well. So, you know, a lot of the focus, and also environmental, having the environment in good shape. And, you know, the area that we're in has been logged. There's no primary forest there. It's all secondary growth forest. It's been grazed. So the land has been used. So one of the things we work closely with the community, even off of our land and in areas where we never had any aspect, weren't involved in the disturbance, was the local land use. We've helped reestablish corridors for howler monkey habitat. And, you know, the howler monkeys, for instance, live up in these trees, and we've done a major reforestation program. So really the way you have to look at these communities is they're part of the project and they're part of your open, transparent dialogue every day.
Great. Thank you very much.
Thanks as always, Chesley. We'll turn to Donald Wong. Donald, question today?
Hello?
Yeah.
I hear you, Donald.
Thank you, Mr. Mandy. Congratulations, Mr. Koval, and your whole team at Lumina on your success. Congratulations.
Thanks a lot. I appreciate that. Yeah.
Two questions. In Ecuador, right now, the Sangay volcano just erupted. Any immediate effects on your team?
No, we're okay. We're quite a ways away.
Good. And lastly, with the government's sovereign bond discussions next week, do you have any expectations?
Well, I think if you look at the bonds in Ecuador, and it was a big milestone for Ecuador to come back to the international bond market several years ago. You know, during the Correa years when he had a leftist populist view, he stayed away from the bond market, the World Bank, IMF, all that. Subsequent to that, all those entities have come back into the country. And, you know, the bond market, if you look at the performance of Ecuador bonds versus the rest of the world, they're down near the bottom tier. But I think one thing that's very encouraging is you still do have that market. You have the IMF and the World Bank backing the country. IMF continues to make finances available to run the government and support the government. So I'm optimistic that the country will kind of weather this storm right now. And the bond market's going to do what the bond market does, but that's not necessarily going to be a reflection on how the country overall is able to move forward.
Thank you very much, sir.
Yeah.
Thank you, Donald. Always a pleasure having you on the call. We'll turn to Doug Wild. Doug?
Congratulations on the great press release, which I read with delight, over the 360,000 ounces on average. And I went back and checked, and usually those numbers are like, you know, 500,000 the first year and only 100,000 in the last year. But yours is really pretty much an average, so that's really great. And I commend that. You were commenting as you went through the numbers, you know, they're done at 1,400 gold, and I think it was $3.50 or 60 cent copper. What happens when gold really is 1,800 or even 2,000, but copper still maybe only $2.50 or $3? Do you have studies that show that?
Yeah, Scott's run some numbers. Scott, are you on where you can tackle that question?
Pardon?
Yeah, so we ran a spot scenario that actually looked at gold where it's at right now, so 1,700, copper where it's at now, call it 255. And actually the other big component that is quite a bit cheaper now than what we used in the study was the diesel price. So if you actually ran spot on all that right now, it would be very similar to that 20% up case we showed. So around the $2.5 billion US. Now, I mean, for every $100 an ounce move you get at this project, it's over $200 million of NPV gains. So it is very levered to the gold price.
Right. That's what I was thinking. And I'm glad you made the comment about diesel, because diesel way down instead of it's usually way upstate makes a big difference in your numbers.
Yeah, to give you an idea of that, like when we did the study, the spot diesel price at the time was about $1.90 a US gallon, and today it's about $1.22, right? So, you know, and Ecuador is a gold or a oil producer, so you know they have relatively competitive diesel prices and fuel prices in the country.
It's one of the things I always like about your presentations is it's very clear you guys really do the homework. So thank you very much.
Thanks, Doug.
Yeah, we'll turn to Michael Potter. Michael?
Hi, thanks for a great presentation, Marshall. I like the fact that you've now got the life up to 25 years. During that time, you're going to get hit at least once, probably several times by El Nino. How's your tailings facilities going to cope with all that rain which is going to fall on you?
Yeah, that's one aspect of the project is we went with a dry stack tailings facility, and we did that for a few different reasons. Initially, we looked at conventional tailings dams, and we looked at areas within, you know, a 25-kilometer radius of the project for potential sites, and there were several. But then at the end of the day, we moved towards a dry stack tailings facility. It allowed us to have similar cost, initial capital and operating costs of a conventional tailings dam, but it allowed us to, you know, shrink the footprint of the project. And then if you look at sort of your question on an El Nino type year, you're not managing water behind a dam, and you have the potential for a breach, sort of like you've had with the Bernardino and project in Brazil and some of the other projects where they had tailings dams failures. So basically what you're doing is you're putting out in a well-drained manner, you know, sand-sized tailings fractions into a facility, and you're compacting and you're revegetating it and managing it. And one of the real benefits of a dry stack tailings facility is you recycle 85% of the water roughly. So that was another positive reason to go to the dry stack. So I don't anticipate those type of events having a major disruption, assuming that whoever builds this project would continue with the dry stack.
Okay, thanks a lot for the explanation.
Thanks.
Thanks for your questions, Michael. We're going to turn to Stratos. Stratos Manlis. Stratos?
Yes, hi. When do you think is the right time for you to get a bigger company as a partner? After you finish the feasibility study, even before that? And what type of a deal are you looking for? Are you looking to have still a stake of something like 20–30%? Or are you looking to be bought out?
Yeah. So the quick answer to the second part of the question is we've always exited and been bought out. That has been kind of the Lumina Group history. If you go back to the first part of the question, we really wanted to understand before we even entertained a potential exit, really what this project meant. And I mentioned the Gran Bestia satellite deposit. We wanted to drill that to understand the magnitude and the potential benefits that provided to the overall project. We're at the stage now where we understand that, and you know, as we demonstrated in this PEA. So we're at the point now where if we had a suitable offer, you know, we would look at exiting the project.
Right. And what are the next steps? You had an updated PEA. You're going to continue more drilling, I suppose.
Well, one of the things we're doing right now is sitting back and getting all the recommendations from the consultants on different aspects of the project. And obviously, we would look to continue to optimize those aspects that the consultants identify. And then, you know, you continue to do the permitting work and now that we are able to size the scale of the project, and this is a quite large project, and we know where tailings would go, we know where a waste rock storage facility would go, we can start to develop the environmental documentation that is needed to advance this down the permitting pathway. So those would be the primary focuses. Now, whether we go back in and drill, obviously we're going to continue to look at what drilling needs to be done, and that's a standard recommendation in the PEA when a 43-101 is done, is what drilling needs to be done next. But at this point, we just finished this study, so we haven't clearly put those plans in place. The one definitive thing that we're going to do is continue to do the work related to permitting and advancing the project, that's for sure.
Okay, thank you for the presentation. Thanks.
Thanks.
Thanks, Stratos. We'll turn to Victor Zhao. Victor, do you have a question today?
Yeah, pretty much my question is answered. Another question maybe. For the, I saw the image. You still have a big area has a gold soil anomaly.
Yeah.
Looks like still have great potential to increase the resource.
Yeah.
Do you have any plan to drill some exploration hole over there?
So I think you can see my cursor here. So this is Cangrejos and this is Gran Bestia, and what Victor's talking about is these sort of areas here. Right now, we've been focused on defining this from an engineering and looking at what the PEA economics were. And there are some additional targets here, but in some of these areas, there's potential blue sky. And right now, it isn't a priority because one drill hole isn't going to change the whole scenario of the value equation here at this point. But it's obviously, if we were to continue with the project, you would eventually want to drill that area.
Thanks. Thank you, Marshall. We're going to turn to Scott Edmonds now. Scott has several questions from the audience that he's going to ask for them. Scott, over to you.
Yeah, thank you. We had really great interest from the audience. I think some of these questions have been answered in partial, so there may be some repeat, but I do want to get to them. First question, is there any time limit on how long you can hold the concessions before you are obliged to go into production?
Yeah, basically what you've got is advanced exploration and then the economic assessment phase under the concession system. So right now we're in the process of consolidating the whole concession package into the advanced category, which would give you 4 years, and then you have 2 years to do economic evaluation, and that can be renewed for an additional 2 years. So you've got basically sort of 8 years ahead of you. But I think more importantly, we've advanced this project quite a bit more than just straight exploration. So you negotiated an investment protection agreement with the government once you get to a pre-feasibility study. And once you have that, you can negotiate your tax rate and all that sort of stuff. So that's this project is in the position that whether we did it or another company, they could probably do a feasibility study in 12 or pre-feasibility study in 12 to 12 months roughly. Most of that time is drilling. So that's a real key milestone. So there's plenty of time left on the concessions.
Great, thank you. Next question. What is the protocol or procedure for marketing such a property? How many entities have the actual ability to take on a project of this size?
Hey, Scott, you're the banker in the crowd. I'll give this one to you.
Sure. So, I mean, I think obviously we've seen a substantial increase in the bullishness in the gold market these days. We give a lot of credit to Lundin, who financed Fruta del Norte in a much tougher market with a combination of equity, debt, and then some streaming facilities. But we think that any company that was kind of a producer and larger than say $2 to $3 billion here could go out and finance this project with a combination of debt and equity, and maybe some more creative options as well. I mean, you've got the copper concentrates. You could look at some copper offtake scenarios into Asia. You've also got a little bit of silver there that you could stream. So there is different things you could look at, but I think in this market, this is a very financeable project, especially if you kind of think about maybe looking to raise that capital 2 years from now. So even a smaller company could put in a lot of preparatory work into raising that money.
Great, thank you. The next question, will management only accept a fair non-discounted offer for this major deposit at the current gold price?
Scott, back to you.
Yeah, I mean, I kind of take that question, obviously in the gold space, we've seen a lot of kind of call it at market mergers these days in the producer space. And I'll kind of take the question that way. No, I mean, I think that's not the sort of deal that our management team would look for. We'd look for kind of a more conventional takeover premium for the asset if and when we do transact. I don't think merging into an equal sized company is what we're looking for right now, just given where our valuation is trading.
Yeah, and I think, Scott, to add to what you just said, there's some development projects that have had deals done recently where they were premium to market. The market seems to like producers. For example, on the board of Equinox Gold, and we did a no premium deal for a merger with Lumina Gold. So in the producer space, and Barrick did one with Gold Corp. So in the producer space, or excuse me, Barrick with Rand, and in the producer space, basically you can see that. But in this sort of development space, and particularly with a company like ours right now, where we feel is significantly undervalued, we wouldn't do a zero premium deal.
Okay, great. And I do have a question. Someone is holding their hand up in the audience. Peter Plimmer, if I unmute you, do you have a question? Peter, go ahead. I guess not. Peter, you can type your question in if you're hearing this. Next question, which I know you've kind of answered, but I thought this was oops, here, let me get back to it. An interesting sub question. Would you be looking at an outright sale or an NSR?
Outright sale.
Okay, great. Can you identify any other similar sized prospective development projects that have been successfully marketed in the way you propose to do so?
Scott, again, back to you. You look at this more than I do.
Yeah, I mean, I think the best analog recently, and obviously they did go through the construction funding, but if you want to think about a similar size development project, and the actual deposits are different, but Continental Gold that had a similar annual production that got acquired by Zijin Mining out of China, that would be a good analog for country risk in South America and for production size. So that transacted for around $1.5 billion.
Do you remember what the premium over market was on that? Because that was, I seem to recall it was in the
30 to 40% range,
yeah.
I think.
Yeah.
So, I mean, there hasn't been obviously as much M&A in the developer space lately, but, I think now that kind of all the most logical production assets out of the majors have been sold and some of this mid-market M&A has been occurring, the next phase of this cycle is really to move back towards refilling the development pipeline for a lot of these companies. So we're hoping, that's what happens here in the next 6 to 12 months.
Great, thank you. Next question. How long will the $4 million cash last before you have to go to the market for more funding?
So basically, the big burn, as I mentioned earlier, is completing this study, and we're just wrapping up the reports at this point. And then the amount of money to run the company goes down significantly. So you know, given that this year, you know, Ross Beaty came out and as the major shareholder said he would like to see a transaction this year, whether it happens or not. We would continue, and if we needed more money, we'd likely go to shareholder loans to carry us on if we saw an opportunity to do a deal on the project. So that's kind of the approach that we have. There's no plans for any equity raise in the near term or at all at this point.
Yeah, maybe to expand on that, I mean, Ross is very anti-dilution focused, so you know he would like to see us not do a raise this year and get to the point Marshall was talking about.
Well, great. Those are I believe every other question that was asked has been answered. If you feel your question was not answered, please do send us an email and we will get it to management and get an answer to you. But I'll turn it back to David now.
Thank you. Rather obvious question, gentlemen. So we're seeing more and more mining companies come into Ecuador. Would you be considered kind of a foothold for someone that's not in Ecuador that wants to come in, good sized mining company, and they come in and buy your property and go from there? Wouldn't that be possible scenario, Marshall?
Yeah, that's a great question, and the answer is yes. I mean, we're the largest gold project in Ecuador, even larger than Fruta del Norte as far as production over the 25-year mine life. Totally different style of mineralization and type of mine. But yeah, if somebody wanted into Ecuador, we definitely would be a potential foothold for them.
Yeah. Great. Scott?
Yeah, and certainly, David, in our sister company as well. I mean, obviously, as that used to be part of Lumina Gold, I mean, when those two were together, it was the second largest concession holder in Ecuador. So, you know, between Lumina and Luminex, there's a lot of very prospective ground in country.
Wonderful. All right, gentlemen, we've answered everyone's questions, and I'll just turn it back to you for closing remarks.
So listen, I really appreciate everybody's time and interest in Lumina Gold, and I hope that we demonstrate that there's a real significant value proposition here. The company has, in my view, a lot of upside potential in the share price, and we've proven that this is a first-rate project. We de-risk a lot of the projects, so our hope, as we talked about the business plan within the Lumina Group, is to add value, de-risk, and sell on to a producer. And in the meantime, we're fully able to finance and keep ourselves afloat, as I mentioned earlier, and appreciate your time and interest. And I think gold in the long term is looking pretty good. So please take a look at us seriously, and plenty of room in the market to buy shares. Thanks.
Thank you, Marshall and Scott. Great presentation. And I want to thank everyone for your attendance today. We'll be following up for information and feedback, and we'll be staying in touch. Thanks again, everyone. Wish you a pleasant evening.
Thanks.
Thanks.